Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, January 9th, 2008. Well, we're seeing the market pull back today, although it was a lot more of a drastic pullback this morning about half an hour into the day. And I'm going to show you the various intraday analysis charts so we can really get a good picture about what's going on right now. Now, number one, let's talk about what happened this morning. And I alerted everyone to this yesterday. We had a jobs data signal coming out, or jobs data information, basically unemployment rate, various other jobs-related economic news coming out around 8:30 this morning. And the question was, which way would the market react? Well, ultimately, on the jobs data, you saw a spike up in the futures, and I can show you that on the futures chart here. It's very interesting. Right here, the jobs data comes out, and look at what it does. You have a huge spike up, then it pulls back, but then it continues to build, ultimately right into the market open. As soon as the market opens, you dump. Very, very interesting today in the intraday period. As you can see on the futures here, this is the ESH9 contract, March 08-09, E-mini S&P 500. Now, ultimately, what happened? Well, basically, you got a little bit of a relief because the number didn't come in horribly. That was the initial spike up. It came in around the 500,000 mark, give or take. The unemployment rate 7.2. But a lot of it, once they started to delve in and dig deeper in the numbers, that's when people started to realize that there were a lot of underlying things that were not good at all. And ultimately, this is what you see here, folks. You see a gap up in the market, a minor gap up, and then it's just a sell, sell, sell. And one thing I do want to point out here is we talk about the 10-minute time frame, right? We talk about the 10 o'clock, 10 a.m. time frame, the 10:30 time frame. You talk about the 3 o'clock, the 3:30 time frame, and look at the sell-off here. You start here, sell 1, 2. On the third candle into 10 o'clock, you make your low. That low never gets closed below the rest of the day so far. Now, whether or not later it does, maybe. I don't think it will. There's been a propensity to close the market on a positive note on Friday. This would be actually the first down day right now where we trade, and even now they're fighting the market higher. So you're even fighting it right now to bring it higher. But right now, you can see that 10 o'clock low was the low in the day. And if you had bought right there, believe it or not, you'd be up very nicely. Even on the spike right after 10 o'clock. And we talked about this in the chat room today, that 10 o'clock was probably a great buy here at the low. We talked about that. Many people did buy an ETF and made a nice little chunk on the bounce back here from this low back towards this high. Now, the interesting thing is, until right here, which we're into right now, which is right around 12:45 p.m. Eastern Time, you've seen the market actually trade in a sideways manner, volume declining for most of the day. It's a decent day in volume, but that's only because of this right over here in pre-market. You had a lot of volume go off when you had the jobs data this morning come out, the unemployment rate and so forth, and then you had early on a lot of volume. You can see the volume here very heavy, and for the most part it's an average day or slightly above average, but for the rest of the day, if I were to look from here on, you're seeing Friday volume in the afternoon, which is very, very light. Alright, so in any case, keep that in mind, and we'll continue to look at this chart and analyze it. Now, a couple other things I want to point out in this video as we do it. Number one, first of all, the channel that's trading here. I want to show you that really from here, the high bounce, for the most part, you were in this channel all day long. Alright, I'm going to draw a line here. Look at this channel here. Alright, from the low to the high, you really just bounced up and down, and I want to show that. Because really that's what you were seeing all day long, a little bit of a channel trading, and you never closed really above the high and confirmed it. And remember, confirmation means that, for instance, on this candle, you had to trade above it in the next candle, and usually even close it. But for now, we'll just talk about trading above it. And you never did that until here. Here's where you start to make a little bit of a move, and you close above it, and then you trade above it, and now you're starting to see the market upticking here in towards the 3 p.m. Eastern Time hour. And that's the key to remember, guys, is you were in a channel for most of the day. Finally, you're breaking out of it, and again, you want to use the low from 10 o'clock oftentimes, and the high from the 10, the bounce back effect, really the high off that 10 o'clock bounce, which is right over here, and you just draw your line across, and you can see that channel we've been in until very recently. Now, what does the channel coincide with here? Well, also, you're seeing consolidation on these three candles right around the 50 moving average. Now a break above the 50 as the market trades up. Alright, for the most part, the market was down, especially around this 10 o'clock and even 10:30, 10:45 time frame, was down pretty significantly. We saw the NASDAQ down 45 points, the Dow down 150 plus, and it was a pretty ugly day to start out. But nonetheless, it was able to fight back again, and you're seeing this constant underlying bid in the markets out there. All right, and that's important to remember, folks, that you have this underlying bid out there. Now, I'm going to flip to the 60-minute because there's not a whole lot of things to discuss here. The only thing I would show you guys, and I want to just erase a couple things on here. Let me just erase some odds and ends on these lines. You have a little bit of a W pattern you could look at. And I'm going to bring that up because it could be significant. We don't know if it's significant yet because the W is just on the process of being formed. But on an intraday scale, check this out. Possible W pattern. Now, what does that mean? Well, it means we could continue up, then pull back, creating the V pattern, and then really shoot up. And that's another possibility. All right, so something that needs to be watched as well. All right, so keep an eye on that chart pattern as well. You have an intraday 10-minute W pattern on the SPY. Now, let's go to the 60-minute because the 60-minute was very significant. We made a gigantic call yesterday in the Research Center. And by the way, everyone should be joining the Research Center because that's where you get the hardcore calls on support resistance levels on a daily and 60-minute candle chart and the end-of-the-day resistance, which sets you up for the next day. And what we talked about in the Research Center yesterday, first of all, we called this drop right here. On this day, we said market's going to pull back here. Sure enough, look at the pull back you've had. The key levels we called as well, all the way down, which supports you're going to have bounces on this 60-minute. And what we said yesterday in the Research Center video is when you had a close on the day, which was right here, we said, guys, be aware that this candle here, this day on the 60-minute, is a bearish pattern. It's a bear flag pattern. And you closed the day right on the 50 moving average. Here's the 50 moving average on the 60-minute, and look at where you closed. Here's where you closed, or I can draw it, I'll draw it out so it's a line, but that's right where you closed on the 60-minute, right at this point. X marks the spot. Now, what does that mean? Well, you had this pattern, which is a bearish pattern off of this move. So this is a down move. You have a bear in spirit of a bear flag right here, which is a negative. You have right into a resistance close, which is a negative. That implicates that you're most likely going to sell the news the next day. Sure enough, what happens today, even when the markets were flat to slightly positive on the open, it didn't matter. The resistance was there, and it sold. And you see that red candle all the way down, which was that 9:30 to 10 o'clock sell on the SPY. And sure enough, that's exactly what you're looking at here. And then you see the channel that we developed, and now you're starting to break up. Now, this could actually be a bearish flag pattern again on the 60-minute. We'll have to analyze that as we go forward, but just keep that in mind as well, folks. Possible bearish flag pattern here on the 60-minute, but on the intraday, you could have a bullish situation here for a breakup on a W. So that just shows you that you want to, obviously, when you're trading intraday 10-minute time frames, you can trade off that. But if you're looking for a larger move, you have to go from the 10-minute, which this is, out to the 60-minute and get a better sense of it. All right, and we'll reanalyze this again in tonight's video in the Research Center, and Nick will have the daily market report up with all the key levels and his projections and his calculations. That's what it's going to come down to. That's what you really want to pay attention to next week. We obviously have a turn date on the horizon too, which we've been releasing in the nightly videos on the Research Center at inthemoneystocks.com, so you want to pay attention to that as well. But nonetheless, the patterns are here. You just read the patterns correctly, you will be a profitable trader. You just have to learn how to read the charts. The charts will tell you everything. It's not, I didn't know the jobs number would cause a sell-off initially this morning, except for the charts. The charts were just telling us that, and you can see the result. You have two negatives, no positives here. Sure enough, you get the sell-off at the open of the day, and you can be prepared for that and actually profit from it. That's what it's all about. So the charts will tell you, again, the jobs data, not so pretty once they started to really analyze it today, even though you got an initial pop early pre-market on it. And sure enough, a sell-off today, but we're only down minor, points. Dow is down 73, S&P down about 11, and the NASDAQ down 28, folks. Have a wonderful day. Come join the Research Center at inthemoneystocks.com to get all the key levels, and it'll blow you away. We give stock picks out there. We have technical videos on education. You name it, it's there. Come join us at inthemoneystocks.com under the Research Center. It's all there. Take care.